right. All right, good morning, agents. My name is Leah Hayes, and I'm the MedSup marketer here at the Brokerage Inc. Today, I have a real treat for you as I'm joining Jason Weber with Mutual of Omaha. Jason's going to talk about the new Omaha Supplemental Insurance Company and why you need them in your portfolio. There is a chat box on the right or at the bottom of your screen, so feel free to type in your questions in there, and then we can have Jason answer them at the end, live after the presentation. This is a recorded webinar, so you'll be sent a copy and a follow-up email from me. This will also be available on our website if you missed anything or you want to hear Jason's voice at 2 a.m. when you're not running appointments. With all that said, go ahead, Jason, take it away.
I like that, Leah. Very nice. Thank you very much. Good to be with you all today. As Leah said, my name's Jason. Hopefully you've dialed in and can view the PowerPoint presentation today. You can see my name on that slide, and then my title is the MedSup Sales Director. I also run with the dental and PDP portfolios. We're not going to be talking about those products today, but if you have a question, we're going to open up some time at the end where you can ask questions, so feel free to mention anything on those products if you have questions, and then I'll also have my contact information at the end of the call today as well. So there will be a lot of content in this presentation. I know sometimes it just takes a minute to let it all sink in. So if you can't think of the question now, but you think of it later on in the day, just shoot me an email or give me a phone call, and I'd be happy to talk to you about anything that you have questions about, okay? So what are we going to talk about today? Leah alluded to the fact that we have a new product in the state of Texas. It's a new company even, a new affiliate company. It's Omaha Supplemental Insurance Company. So we're really excited about that. We had pretty decent rates in Texas before, but with a new product, we're even more competitive. So we're really excited about that. If you have put more of your MedSup business with another company because another company offers a more competitive rate, we may have fallen off the radar with you. So I want this presentation today to serve as a reintroduction for you to Mutual of Omaha. So if you have been writing more of your business with another company, maybe you forgot about some of the fun and exciting things that we offer to encourage agents to write more of their business with us. So that's what I want to talk about today. And then, like I said, we'll save some time at the end for questions. I like to start here. This is a fun little slide I put together that kind of sets up what I want to talk about today. If I was Mutual's life rep, I may be on this call today and tell you, you need to write more of your life insurance business with Mutual because we have a better product. Maybe the benefits configuration is a little bit sweeter. Maybe one of our products offers a really slick rider that we think is a great solution for your clients. And your clients can only get that by owning our life insurance product, right? With MedSup, I can't talk about those things, right? Because MedSup is a standardized product. A Plan G is still a Plan G. Our Plan G does not provide any additional benefits that Cigna or Aetna or United Healthcare does, right? The Plan G is still just a Plan G. And it's kind of like when you go into the grocery store and you buy a gallon of milk. Are you going to buy the one on the left or are you going to buy the one on the right? Well, milk's milk. It tastes pretty much the same, right? You may be buying the one this week that's on sale. Maybe you bought the other one last week and now you're going to buy this one because you're saving 50 cents. Well, that, albeit very simplified, but that is kind of where the MedSup conversation starts. All things equal, why pay more than you have to? It's kind of like your car insurance, right? So I do want to talk about our rates in Texas with our new OSIC product, but I do want to talk about some other things as well, because while the core benefits of any of the plans available for sale today are the same across the board, there are a few things that MedSup companies can do to differentiate themselves from the competition. So I'm going to talk about those other things as well, but you have a lot of options, right? We're one of a lot of really great companies out there that sell Medicare supplement policies. There's a lot of competition out there. A lot of these companies are doing really exciting things as well. We're very cognizant of what those companies are doing, and we're eager to earn more of your business, like I've already mentioned a couple times today. So I want to say thank you for the business that you've placed with Mutual of Omaha, and if we can get a little bit more this year, that would be really great too, okay? I have this in here. It's pretty self-explanatory. You can read through the bullets, but I do want to mention, I guess, the third and the fourth bullet. So we're the largest agent-sold med sub carrier, and we're the second largest overall, okay? So who is the big kahuna out there? It's United Healthcare, right? We all know it. United Healthcare is a great company. United Healthcare has really grown marketing directly to consumers. That's why you see so many UHC commercials on TV. Mutual of Omaha, we have a direct-to-consumer distribution as well. So we do mail out postcards and applications. We have a very small, not nearly as big as United Healthcare, but we do have a very small TV advertising program that we do as well. So you may see a commercial on TV in a few markets around the country, but it's really dwarfed in comparison to what United Healthcare does. And it's also dwarfed within our company relative to what we call brokerage sales. So that's how you have access to market our products to your prospects and clients. And that's where that third bullet comes into play. So we're the largest agent-sold med sub carrier, and we take a lot of pride in that. And why do I mention that in this presentation? That really should mean something to you. Everything that we're doing as a company is designed to increase our brokerage distribution, and that is you, right? So anything that we're doing to grow that segment of our company, we do that through lucrative incentive programs like a Cash for Apps program that I'll talk about later in the presentation, our broker bonus program. We do it through our trips, Mutual Sales Leader. We're going to London next year, which we're really excited about. We do it through making our sales tools more valuable to you so that you can run your business in a more efficient way. If we're asking for more of your business, we have to be a good business partner to work with. A lot of it has to do with underwriting, making sure that we get apps out the door quickly. That way your clients have coverage when they need it, and that way you're getting paid for all the hard work that you're doing. If we were a pain in the butt to work with, you may be a little bit more reluctant to quote us the next appointment that you're running, even if we're the lowest price in town, right? If we're a pain in the butt to work with, you know, you may say it's in your best interest to pay an extra $3 a month just because I enjoy this company more and you're going to enjoy that company too. So those are all very controllable things that we're very aware of, and we try to make those as pain-free as we can because we know that's going to earn more of your business down the road. Okay, so the fact that we're the largest agent-sold med sub carrier, we take a lot of pride in that fact. I pulled this graphic actually straight from mutualofomaha.com, and this should absolutely be a part of your sales presentation. When you're running a new appointment and you're going to set somebody up for a med sub for the first time, you're going to quote a few companies, all of those that you're contracted with, and this should be a part of your Mutual of Omaha story. There's a lot of competition out there. If you look at our heat maps, I would say just relative to 18 months ago, a year and a half, the med sub market has gotten really, really competitive. We're not as competitive, and I don't think any company is as competitive as they once were. There's a lot of smaller regional companies coming in with very competitive Plan G and Plan N rates. So it's really tough to stand out from the pack like we once could. So what are some other things? Well, I mentioned a lot of them already, but here we're looking at the financial stability of the company. And if you have the new player in town, ABC Insurance Company, you've never heard about them before, but all you can see is that they offer the cheapest rate. You know, that's really exciting, and I think it's really easy to say you need to buy this company's med sub product. But what is that rate going to look like of a few years down the road, 3, 4, 5, 6, 7 years? Do they have the track record like a Mutual of Omaha has? Do they have the financial stability like a company like Mutual of Omaha has? Are they going to be in business to pay that customer's claim when they need to use their coverage? Are they going to have a 10 or 15% rate increase next year? We try to keep our rate increases minimal, and we're able to do that because we have a lot of experience in pricing these products. So the financial stability of the company that you represent absolutely should be a part of that presentation, in addition to the rate that you're quoting. The conversation should absolutely not end in just what the new business rate looks like. I have this slide in here, and I think this is something that has really benefited Mutual of Omaha as well, and that is the Wild Kingdom. I'm sure everybody, hopefully, everybody's heard about this, but if you haven't, this was a really popular TV show back on, I think they had its heyday probably in the 60s and the 70s, right? Well, I have that in a MedSup presentation because the people that are most familiar with the Wild Kingdom and through this TV show, Mutual of Omaha, these are the people that are buying MedSups today. And when we talk about how competitive the market is, when we talk about ABC Insurance Company being the cheapest rate in town, Mutual of Omaha has really grown its brand recognition through this show, and this has earned us a lot of business. And when it really comes down to it, people want to do business with a company that they know and they trust. And I think our brand awareness and the trust people put in Mutual of Omaha, a lot of that has to do with this show and the fond memories they had watching it when they were a kid. So make sure you talk about this. We're really excited about the partnership we have with the Wild Kingdom. So now we're going to jump into some of the more product-specific stuff. And I have this up here. We can send this out to you in PDF form after the call. This is a look at our plan availability. And you can see in Texas, we got a nice new yellow color on this map now, and that is because as of August 1st, we are offering a new product in the state of Texas. And if you look in the bottom left-hand corner, you can see that that is Omaha Supplemental Insurance Company, or OSIC for short. So it's a new company. This is a way that we can offer more competitive rates. Okay, let's talk about the color that you see here. So yellow for OSIC in Texas, but we have four, or Mutual of Omaha, and then 3 affiliates that we use as well. Those are United of Omaha, Omaha Insurance Company, and then most recently in Texas before OSIC was released last week with United World. And I think a newer agent may say, why do you do this? You know, I hear everything that you talked about with the Wild Kingdom and the financial stability of the company, the biggest agent sold carrier, all of that's great, but when I get the policy in the mail after it's been issued and it says United World Life Insurance Company, you know, with that one, I think that's a bigger hurdle that agents have to jump over just because Omaha is not even in that company name. So did my client buy a Mutual of Omaha product? What is up with this United World? You know, why do you guys do it that way? Well, the whole point to that is to keep our rates more competitive. If we only ever offered our MedSup products on Mutual of Omaha paper, we have a lot of claims experience that we have to take into consideration when we price the product. And when we release a new company like OSIC, that's a way that we can segment our block of business and we don't have to take any of that other claims experience into consideration. We can price that product more aggressively. So that allows us to do that and to be more competitive with all of those other companies that you saw on that slide a few slides ago. So that's why we do that. It's really just to keep our rates competitive. The other thing I want to talk about on this slide is in Texas, you can see underneath the plans, you see a 12%, or up north in Oklahoma, you see a 7%. Those are our household discounts, and this is one of the other key ways that we get business from agents because the discount is not the same across the board. Yeah, the plan benefits are the same, but what are the ways that we differentiate ourselves from the competition? The discount is one of those primary ways. You can see that there's a 5% discount out there, there's a 10%, we have a 7 and a 12, so the amount is not the same across the board. And the way in which your client would qualify for that discount, that's different too. You could very well have somebody that qualifies for a discount through company A, but not through company B. And if they qualify for ours, and we can shave 12% off of their annual premium, well, that's going to make our rate that much more competitive, and hopefully it's going to earn their business, okay? So we're really excited about our discount. This uses a pretty liberal definition. It's pretty easy to qualify for this, so let's talk through it real quick. This is what we call a cohabitation rule. And that means that if your client, the applicant, lives with a spouse or a domestic partner under the same roof, they're going to qualify for this discount. So if they say, yes, I'm married and my spouse lives with me, they qualify for the discount, and you can go ahead and quote that discounted rate. But it doesn't end there. Let's say they live with like a brother or a sister, sibling. They can qualify in that circumstance too, but if that's what we're looking at, we ask that the person the applicant lives with is at least 60 years old and they've been living together for at least the previous 12 months. Okay, so if we can say yes to those two additional things, you can go ahead and quote the discounted rate for someone in that circumstance as well. Okay, so once again, if it's a spouse or domestic partner, that's it. Doesn't matter how long they've lived together. They could have moved in last week. They could be 40 years old, and they would still, the applicant would still qualify. Okay, but that's only if they're married or if the person they're living with is a domestic partner. They're in some sort of domestic partnership that's recognized by the state. But if it's someone else, like a brother or a sister, then we add the 60-year-old requirement and we add the 12 months living together requirement, okay? And some agents ask us why we have those additional requirements in place if it's not a spouse or domestic partner. Well, the whole idea behind a discount is to encourage you to give us more of your healthy business. That allows us to keep more competitive rates for a longer period of time. That allows us to keep the rate increases to a minimum. And there's a lot of research out there that shows someone that is in some sort of intimate relationship, they tend to lead healthier lives. They're just happier people. They get out of the house and exercise more. Those are the types of customers that we want owning our product. So the way that we encourage that business to come to us is to offer a discount for those types of individuals. Okay, so that's why you see most companies tie a discount to household living status. It's the healthy business. And with someone where it may not be some sort of intimate relationship like with a spouse, but they do still live with somebody, well, we're still trying to identify those healthy individuals. And they could live with like a live-in caretaker, for example. It's not the healthiest person out there. And that person could be 25 years old. So that's why we have the additional requirements. If it's someone other than a spouse or domestic partner, we're still trying to identify those healthy individuals. So that's why we have those additional requirements in there. And then I skipped this part down here, so let's talk about that as well. This states that the household discount is not available to individuals who reside with 3 or more adults for the previous 12 months. And what we're trying to avoid there is like a nursing home situation. They could live with a whole bunch of people that are all over 60 and they've been living together for the previous 12 months, right? So you may think they qualify, but if they're in a nursing home, probably not the healthiest individual out there, right? So that's why we have this last bullet in here. If they live with more than 3, they're not going to qualify for this discount, okay? So I realize that's a bit wordy. If you have questions on how that works, just let me know at the end of the call. But once again, spouse or domestic partner, they qualify for the discount. If it's someone else, 60 years old, lived together for the previous 12 months, they qualify as well. Okay, so here is a look at our competitive landscape. What we're looking at here is our Plan G for a 67-year-old female. And this is going to quote that rate versus those national companies. So this does not take all companies into consideration. It does not take into consideration, for example, Medico, United American, Sentinel, some of those smaller companies. This is a presentation that we use all across the country, and we most frequently come up against the likes of Cigna, Aetna, Blue Cross Blue Shield, and United Healthcare. So this heat map here is taking our rate relative to those companies only. Okay, so just an FYI on that point. And then the other thing I should point out, this actually does not take into consideration our new OSIC product in Texas. So while this still looks pretty good, we're looking at up to $6 to $10 over one of those companies. The new OSIC product is even better than that. I believe it will look all that nice shade of navy, or maybe it's coming across as black on your screen. The reason I don't have that for you here is these maps are created for us by CSG Actuarial, and we only get that map once a month, and I did not have that in time for this presentation. So as a follow-up, I'm going to give to Leah, once it's available, our new heat maps to show you that our new OSIC product is going to be really competitive. So we're really excited about that, and I hope you are too. If you do any business in any other states, I realize the majority of the folks on the call today do business in Texas only, so I definitely wanted to talk about OSIC. But if you happen to do business in any other state around the country, we have very similar plans rolling out in a number of other states as well. So you can see Texas on there. It was technically available on July 29th, but I think all of our press releases and stuff say August 1st. But we did Georgia earlier this year as well, and then we have Alabama, Mississippi, and Tennessee that recently got approved, and those are going to be released at the end of this month. So we're excited about that too. And then we have a few that are currently with the state departments of insurance. They have not yet approved. That's why we don't have a release date yet. But as soon as that happens, we're going to release these as well. And I would imagine these do drop sometime at the tail end of the third quarter. So think like September, October timeframe. Hopefully it doesn't take any longer than that. But we do have repricing happening all across the country. We do this every year, and this is what the list looks like for this year in 2019. Okay, now I want to switch gears and talk about our value add programs. So we offer 3 now, and we have some breaking news on this front that I'm really excited to share with this group today as well. But all 3 of these combined are the value add programs that all Mutual of Omaha Medicare supplement customers receive. They don't have to opt in or sign up for any of them. They don't have to pay any additional premium. These are completely free services that they can participate in, with the idea that this provides a more complete, more positive overall customer experience, and they hold on to their policy longer. The point of these programs is to increase policy persistency. If someone, they have a mutual med sup and everything's going great, right? The claims are paid on time, the premiums stay affordable for hopefully 5 to 7 years at least, if not longer. If they have a question on the policy and they call into our company, they get a professional and a quick response that answers their question. Hopefully all those things are going great. But if they also see that they have, for example, for this one, iMed Vision Care, they have access to a program where they can get discounts on frames, contacts, and eye exams, hopefully that provides even a stronger positive customer experience, and they hold on to their policy longer. So that's the whole point here. And persistency is really where the profitability of the product comes from. That means it's more renewal income for you. If you have happy customers and you don't have to keep moving them to a new company's product every year, hopefully that means you can focus more on prospecting for new business, and that's more profitable business for the insurance company as well. So there is a ton of good news that comes along with these products. So hopefully you're promoting them to your Mutual of Omaha customers so that it has the intended effect, okay? This one that we're looking at here, iMed Vision Care, we talked through it a little bit already, but yeah, so eye exams for $50, 40% off of frames. I should add contacts in there too. It's 40% off of some frames and some contacts as well, up to $140. It's not available in New York, so just be aware of that. I doubt anybody on the call today is doing any business in New York, but if you are, just FYI on that point. And then the flyer that you see on the side, that's actually the flyer that comes with the policy packet, okay? So next time you sell a Mutual of Omaha policy, which hopefully is pretty soon, and you write one of our med subs, you get the packet in the mail, you see this flyer in there, hopefully you can talk through it a little bit quicker. The next one I have is Amplifone, and this works very similarly. So where iMed was focused on vision-related services, this has everything to do with hearing, okay? So the first thing on this, hearing aids. We all know hearing aids can be really expensive, right? Well, if your client gets a quote from a third party, they can bring that quote to Amplifone, and Amplifone will match it and offer an additional discount of 5% on the hearing aid purchase itself. So pretty good savings there. There's a risk-free trial on the hearing aids for 60 days. So if they get it, they decide they don't like it, it's too expensive after all, they don't like how it fits in their ear, whatever. They can send it back and get a full refund, provided it's within 2 months. Free batteries for a couple years on the hearing aids as well. And on this one, there's actually a coupon that you can cut out of the flyer. This comes in the policy packet as well. And it's for $50. This is in addition to the discount up here, $50 off of one or $125 off of 2 hearing aids. So more cost savings in there. And this one is not available in New York State as well. The last one I have is Hospital Choice Savings. And this is a pretty cool program. Bottom line, it saves your client $100 per benefit period when they're admitted into a participating Part A facility, okay? So we're talking hospitals, nursing homes, and skilled nursing facilities. When they go into a Part A facility that's included in this USA Senior Care Network, they will get a $100 premium credit on their next billing statement, okay? But they have to go into a Part A facility that's included in this network to get this, okay? And we get a lot of questions on this. A lot of people say, Jason, what are you talking about? MedSup, there is no network, right? Yes, absolutely, that is still the case. So if your client has an OSIC now product in Texas and they go on vacation to California and they happen to need to use their MedSup and they go in, they're admitted into a Part A facility. Will that claim still be paid? Absolutely. There is no network with Medicare supplement policies for our company or for anybody else. But if they go into a Part A facility that's included in this network here, that's where they have the opportunity to receive the $100 premium credit. Okay, so that's the rub on this one. I will say that the network is very good in some states, and it's not so great in others. But it is really good in Texas, so just FYI on that point too. But if you want to take a look at the broader network, go to this website here. You can take a look at all the participating facilities within this USA Senior Care Network, okay? And then I don't have a slide for it, but the breaking news that I wanted to share with you too is that we are, on October 1st, we are allowing all of our MedSup policyholders to be a part of a new fitness and wellness program. It's called Mutually Well. Mutually Well is offered by Tivity Health. And if you know, Tivity Health is the parent company of Silver Sneakers. So there is a ton of popularity. We all know it. We all know how great of a program Silver Sneakers is. We are offering a very similar program. We're branding it as Mutually Well, and that is going to be available for the first time on October 1st. Okay, so what do you get with Mutually Well? There is a network of gym memberships nationwide. I believe there's over 11,000, so pretty excited about that. And to get access to the gyms, there's a $25 per month fee that they would need to pay. But if they don't want to do that, they can still participate in the Mutually Well program. You just won't get access to the gyms. But there's a lot of other stuff that comes along with Mutually Well as well. So you can go to mutuallywell.com. That site is not yet live. That goes live on October 1st when we kick off the program. But if your clients don't want to pay the $25, get access to the gyms, again, they can still sign up for Mutually Well and get access to the other stuff. So we're talking about discounts on acupuncture, massages, various wellness programs. There's also a walking plan that they can download. There's nutrition programs that they can download. So there's a lot of free stuff that everybody's going to get with the Mutually Well program. It's just that if they want the gyms, the access to the gyms, that's where they have to pay the $25 a month fee, okay? So we're pretty excited about that. Once again, that kicks off on October 1st. A few other small updates I wanted to share with you If you happen to do any business in Florida, you may not, but again, this is a kind of a generic presentation we use in a lot of different settings. We have a household discount that's filed in that state. If you do any business in Florida, you may know that we currently don't offer a household discount, but that is filed. So as soon as that is approved, you'll be able to offer our 7% discount in that state. Talked about the fitness program, so once again, that's Mutually Well, and that happens on October 1st. We recently moved out all of our Med Sup products, I should say, to anniversary rating. What is anniversary rating? That means we do the age bump increase and the increase due to claims experience, the annual rate adjustment, as one event, and that always happens on the policy anniversary date, okay? So the date that it was first effective, okay? So both of those happen at the same time now, and then it happens on the policy anniversary. We've recently increased plan end compensation by 4 percentage points. That took effect earlier in the summer. We're seeing a lot more traction with our plan end. We're seeing some competing companies that increase their plan end compensation. So we would love more of your plan end business as well. If you write a plan end with us today, you're going to get 4 additional points relative to when you had done it earlier in the year. So we're excited about that too. And then we've made a few minor e-app enhancements. We're not going to show you what those look like in light of time, but if you do a lot of e-app business, hopefully you've enjoyed using our e-app. We like to think that it's a pretty good one out there. We've made a few small enhancements, just like some quality of life improvements that we're excited about that hopefully make that even easier to use. So those are just a few quick hit items. Now I want to spend the remaining of the time today talking about our marketing and incentive programs. So again, the Med Sup products are the same across the board. You may like working with a particular company, but we also like to highlight our incentive programs, because if you can make more money selling our product, well, hopefully that is going to earn more of your business. So we're really excited about the ones that we offer. The first one I want to talk about is our annual incentive trip. It's called Mutual Sales Leaders. Hopefully you've had an opportunity to go on this trip before. We do some pretty cool locations. So this year we did Dominican Republic. We've been in Ireland. We've been in Laguna Beach. We've been in Rome. We've been in Hawaii. So we do some pretty great trips. This one is in London. It's for the qualification period is for this year, so it ends on December 31st, and the trip is going to happen in March next year. Okay, so let's take a look at how you qualify. There's actually several ways to qualify, but since we're talking about Med Sup today, we're just going to show you the Med Sup qualification requirements. But if you happen to do any like final expense or ancillary health, like critical illness or cancer, you can qualify marketing those products as well. For Med Sup though, our qualification requirement for London next year is 275,000 production credits. What's a production credit? It's essentially $1 of new business premium. Okay, so you think the average case size on a Med Sup policy is about $1,500 per year. Well, when you write one Med Sup, you're going to get 1,500 production credits on your way to 275,000. Okay, so that's how you qualify. The period was the entire year of 2019, so January 1st to December 31st. You have to get to 275 to qualify for this trip in March next year. I want to talk about our marketing credits program. So this one's pretty cool. As far as I know, we're the only company that offers an incentive program that gives you money that you can use to reinvest into your business. Okay, so here's how this one works. You have to write 5 Med Sups in a month, and when you do that, we're going to pay you marketing credits, and if you're using our e-app, we're going to take a look at the annual premium that those 5 policies generate. Again, it's about $1,500 per policy, and we're going to pay you 1% of that figure in marketing credits. You can check your balance on our website, so if you go to mutualofomaha.com/broker, okay, make sure you put the /broker, B-R-O-K-E-R, in there. That's our back office, okay? So it's not our consumer website. This is where you're going to get product details. You can do AHIP training for Part D. You can order applications. You can see all of the stuff that I talk about today as well. So go on to that website, and you can check your marketing credits balance by typing in your production number with Mutual of Omaha, and you can see how much you've racked up. So they do accumulate month to month. They do ultimately expire, so be aware of that. This year they expire on November 30th, right here. So if you do have a marketing credits balance, make sure you're using those before this date. And what can you use them on? I think the most popular offering is lead reimbursement. So if you go through a vendor and you're buying some leads, just submit that invoice to us. And if you have a marketing credits balance, you can use those to reimburse yourself for part of that expense. Some other things, if you do any mailings, you want to send out some postcards to the leads that you just purchased, you can use marketing credits to pay you back on the shipping cost. So go into FedEx and they're going to send them out for you. Just submit that FedEx invoice to us. You can use marketing credits for that too. But it is pretty lenient on what you can use the marketing credits for. So if you want to buy a new laptop for your business, you can submit that Best Buy receipt to us and use marketing credits for that. So it's pretty wide ranging. Pretty much anything that you view as a business expense, you can use marketing credits for. And then the last one I have is this broker bonus program. So this is a pretty straightforward cash for apps incentive. You see most carriers are doing it, but this one does have a little bit of a spin on it, and that is we want more of your underwritten business. I talked about this before. This helps us with the rate increases. So we want as much underwritten business as we can. So we pay a premium for the underwritten apps. So it's $150 per issued underwritten application. We want your open enrollment too, so don't think we don't. This is included on this program too, and we're going to pay $30 for each issued open enrollment application. This works like the marketing credits program in that you have to write 5 in order to qualify. Okay, so if you wrote 4 and you're wondering where your bonus was, it's because you have to write at least 5. Okay, that's the trigger. Once you get to 5, we're going to pay you the $150 or the $30 on all 5. Okay, but you have to get there in order to qualify for any payment. We also are only going to pay on the F, G, and N plans, and only for business in these states. Why is that? Well, some states have stricter compensation guidelines on what carriers are allowed to offer. It is offered in Texas, so good news there. But if you do happen to do business in any other state, just be aware that we're not going to pay bonus on all states. Okay, so it's only on these. This states that this incentive ends on September 30th. That may not be true. We take a look at this on a quarterly basis, and if it's impacting sales like we wanted to, if it's impacting underwritten mix like we wanted to, we will extend it. So we'll just reanalyze that at that point in time, and if we happen to move forward with it, we'll make an announcement, and you'll have some sort of communication through your upline, which is the brokerage. So stay tuned on that. And then, like I said, there's a few states where we can't offer that bonus. Well, these 5 right here, Indiana, Missouri, Montana, South Carolina, and Wisconsin, they have stricter guidelines, but they do allow us to do something. So we don't do the 150 and the 30, but they're allowing us to do 40. This is for all business types. We couldn't differentiate. That's one of the additional rules these states have. So if you're doing any med sub business in these states for Mutual of Omaha, just understand that we're going to pay 40 per app for those states. Okay. All right. I forgot I had this in here. So this is the last thing I have, and then we'll open it up for questions. But we do have a quoting app that you can download onto your smartphone. You can see an iPhone here, but it does work in Android devices as well. This is just a simple and easy to use quoting tool. Okay, so you can't submit an app on the smartphone through this app. It's just a quick way to get quotes. Okay, so if you're on your way to an appointment and you're in the car and they call you, and you thought you were going to talk about Plan G rates, so you only quoted Plan G in your briefcase, but they call you and say, hey, I was just talking to my neighbor, and they said they have a Plan N, and it's works really well for them, and the rates are a little bit cheaper. Can we talk about Plan N as well? You may be thinking to yourself, well, shoot, I don't have that ready to go. Well, download this app, and you can do this on your drive over to their house. So you can see here that we have MedSup, but we also have a lot of other products that you can quote on this app as well. So if you happen to write any of those with our company, you can do those as well. But it really looks just like a simple quote tool. So zip code, gender, if you're doing 1 or 2 people, and then if they qualify for guaranteed issue or if they're a tobacco user. And then you're going to see the available plans in that state along with a monthly premium. Okay, that's all there is to it. Once again, you can't enroll anybody on this app. It's just a simple way to get quotes on the go. Okay, so go to your app store. Again, it works on Apple and Android devices. Just search Mutual of Omaha. What you're looking for is quotes for sales professionals, and download it. And the first time you load it up, you're going to have to put a passcode in it. Why do we have that? Well, when you think about it, anybody can download any app out there, right? This is really meant just for insurance agents. So we try to make it as simple as we could. The passcode is agent, so write that down. You only have to type that in the first time you load the app. On subsequent loads, you're never going to see that. It's just the first time. So again, we try to make it as easy as we could, but there is a passcode the first time you load it after you install it, okay? So that's all I have. My name is Jason. It was good to be with you today. That is my office phone number and my email address. So jot that down. I want to be a resource for you guys. So if you have any questions at a later date, please reach out to me and I'd be happy to talk to you. Okay. So with that, I'm going to turn it over to Leah and see if we have any questions that came in.
All right. Well, let's take a look. It says from the first one, it says, I understand why you release a new block for lower rates, but what happens to the old block of business and their rates? How long before their rates go sky high?
Ooh, that is a very good question and a common question. So thank you for asking. So yes, it's true that when we release new paper, there is some concern that the closed blocks are going to see higher rate increases for a couple reasons. It's not the currently marketed block anymore. So I think some agents have the idea that, the big bad insurance company is just going to jack the rates up to make more money, and we don't care about those policyholders or the agents that have to field those phone calls. There's also the concern that with a closed block, you don't have newer, younger, healthier individuals that are purchasing that product anymore to offset the higher claims experience of the older, less healthy people. Well, and I can provide this to you, all of our closed blocks do maintain pretty stable rate increases, okay? So that's step one. And if you're ever curious on what our rate increase history looks like for our closed blocks, I can provide that detail to you, so just shoot me an email and I can get you all the rate increase history that you want. So that's point one to make. And point two, it is absolutely in our interest as well to keep the rate increases affordable, okay? We want people to hold on to their policies as long as they can. That's why we do the value adds. That's why we promote our financial stability. That's why you can go onto our website and you can find, you don't even need me for this, you can find our rate increase history for the past 2 years on all of our plans all across the country. Okay, so we make that data available because we want peace of mind that we're going to try and maintain manageable rate increases. Okay, so if you, and I'm not saying that we always have, 3% increases. We do have some higher ones. That is true, but it's always at the behest of our claims experience. Okay, it's only where we need to do it. So if you have that concern and you want to have a more in-depth conversation with me, I'd be glad to have it with you. But please understand that it's always our intention to keep the rate increases as manageable as we possibly can. Okay.
Okay, great. All right, second question says, the rating on the policy anniversary, but also on the birthday of the patient. I guess she's asking, is there 2 rate increases? Yeah.
So that's why we did anniversary rating. Before, they were 2 separate events. So if you're in an attained age-rated state, which I believe Texas is, so they're going to get a small price increase when they have a birthday. So they're going 67 and now they're 68. Well, now they're going to pay the rate for the 68-year-old. So they get dinged for that, and then they get dinged for the annual rate adjustment, which is in effect for the entire block. So all policyholders within that state that owns that product, they're going to get the rate adjustment too. So you could have a 3% rate increase due to claims experience, and then you're going to get like a 2% rate increase because they're now 68 years old. Well, before we did anniversary rating, those were 2 separate events, And in the research that we did surveys out to a big chunk of our policyholders. We asked, would it be better if we combine those two events together? And that's what the move to anniversary rate provided. Okay, so now they're still getting those two increases, an attained age increase and an increase due to claims experience, but they're combined, they happen together, and they always happen on the policy anniversary. So now in Texas, your clients will not get an increase on their birthday. It only happens on the policy anniversary, okay?
Okay, great. The next question says, when can we get the mobile app?
Right now. So that is actually something that we've offered for several years. So go on your smartphone right now, just type in Mutual of Omaha into your search bar. And then you're just going to look for I should have put a screenshot of the logo itself, but again, it's Quotes for Sales Professionals. And the look of the app, it's just like our Indian head logo. It kind of looks like this in the top right-hand corner. So just look for that. That's the one that you want to download. And again, you're going to have to type in that passcode as agent, and you should have a look like this here. So you're going to see all the products that you can quote. But yeah, it's available right now, so you can go ahead and download it right now.
Awesome. All right, guys. Well, it looks like there's no more questions. If you have any more questions, go ahead and type them in the chat box for me. Otherwise, I just want to say thank you so much to Jason for your time today. A lot of great information and going over the new product and the new company. So yeah, thanks for everything. And guys, I'll be getting a follow-up email out to everyone who registered for this webinar, and you'll get a recording as well. And then we'll be having it on our website, so that way if you want to take a listen, you can. So thanks so much, Jason.
All right, thanks, Leah. Thanks, everybody. Have a good day.
You too.